Hello and welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust is the best way for you to sell highly appreciated primary homes, businesses, cryptocurrency, save a failed 1031 exchange so you can defer millions of dollars in capital gains tax and create and preserve more wealth. Hey, I'm your host, Brett Swarts. In each episode, I'm joined by some of the best real estate, financial, wealth, sometimes debt minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. We're also streaming on expertcresecrets.com, so we appreciate everyone out there checking us out. Hey, I'm excited about our next guest. He is all things debt. Wanted to help you save thousands on your mortgage and also figure out ways to build wealth using debt. He is from my hometown, Sacramento. He is experienced mortgage professional, and he has knowledge and expertise, again, to empower us as we explore our options and so much more. Please welcome to the show with me, Matt and Gouge is how you pronounce it, correct, Matt?
You nailed it. Nailed it, brother.
Excellent. Well, welcome to the show, Matt. And for our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Sure. So Matt Gouge, affectionately known as Matt the Mortgage Guy, been in mortgage for about 8 years. Thoroughly enjoy, empowering folks through education. And I think that that's kind of like, what my YouTube channel is built on, what my whole business honestly is built on is, empowering people to make smart decisions around their mortgage through education. So when people understand how debt works, they understand how a mortgage works, they understand all the options, they're empowered to make the best decisions. And you've talked about, being a debt expert. That's kind of how I view myself. You've got a financial advisor who helps you manage assets. You should have a mortgage advisor that helps you manage debt, because debt is an amazing tool. And, the proof is in the pudding with the millions of people that have used debt to accumulate, massive amounts of net worth. And so it's a chainsaw, right? You could cut your arm off, or you could be really efficient at cutting down trees. Debt is a great tool, but if not used properly, it could lead to, some devastating stuff like losing an arm. So me and my team are trying to help folks. We deal with, people buying their primary home. We deal with investors buying their 17th rental property, and probably everything in between. And most of it boils down to, like you said, helping them have a clear understanding on how to manage their debt in a responsible way. Because we're probably both old enough that 2008 isn't that far away, right? There were some people that were over leveraged, setting themselves up in a bad way. And that's the negative example of debt. And then you've got, the people that have absolutely flourished over the last 18 months, leveraging debt in the correct way and watching assets appreciate, versus inflation.
That's fantastic, man. And now the idea for what the show's all going to be about is all coming to me right now live. And I can already tell that your gift that you've been given is empowering people through education, and the expertise that you're focused on is debt, and you become a master in that. And now we're gonna apply all of this to basically my story and Matt's story. I started in 2006. Matt, when did you start?
In mortgage, end of 2013.
Okay. And but you grew up in Sacramento during the time when the market crashed and people were hit, right? And you remember Sacramento is one of the hardest hit cities in America, right? In fact, Lincoln, California, I live in Roseville, offices in Folsom, Matt's in Sacramento. This is all kind of the greater Sacramento area. Lincoln, California, in fact, in 2006 was the fastest growing city in America. Right. Wow. There was like more people. It was growing the fastest, and it was incredible amount of growth, right? An incredible amount of appreciation. And then we saw the marketplace kind of just for people who were over leveraged, right? Who that chainsaw mentality, right? Got caught either with too many rentals or too much debt or lost their jobs. It was a tough time. They were hurt by it. But then the flip side of this, the last 5 or 6, 7 years, people have made fortunes, right? Fortunes and fortunes and fortunes using debt in a proper aspect. So what's the number one secret, Matt, when it comes to making sure that debt is your friend and maybe not your enemy?
Right. I mean, I think people have to do it in a responsible way. And so, a lot of folks will get into real estate investing, which is kind of, my lane, and they'll want to post one comment on one piece of content on social media. Should I buy in this market? And like that's the extent of their research, right? Versus, actually doing the work and figuring out, what a good investment looks like, not just in general, but for them and their goals, and then tailoring the debt to match that. And a couple examples I'll use for people is, somebody who's trying to build long-term wealth and doesn't need cash flow. They've got a steady job. They plan to work for the next 10, 15, 20 years. That's a different type of investor and a different type of strategy than somebody who says, I'm trying to retire 4 years from now. I want to build, a rental portfolio that spits off at least $4,500 a month so I can have my bills paid and not have to worry about working. Those are two different, debt structures, two different, types of investments. And so everybody has to look at it differently. And that's why, it's not a one size fits all. And just like an investment strategy, you don't have an investment advisor saying, here's my one strategy, everybody use it, you're going to be rich. You have investment advisors saying, come to me, I'll look at you and your goals and your situation and tailor a plan that's fit for you. The same thing happens on the debt side. Somebody comes to me and, a lot of times we're trying to structure a loan for this purchase of a rental property, but to really do it right, I want to know what your future plans are. Is your primary in this investment the end of the road, or do you plan on adding 2 more? Do you plan on adding 10 more? What are your long-term and short-term goals? How do we start walking that path towards those? And anybody who's seen any kind of thing on like the power of leveraging real estate understands. I mean, let's take a simple example. You bought a house in 2018 for $400,000. If you put 5% down and moved into this house, you were in it for $20,000. So you have a $20,000 investment. Most any place in the U.S., appreciated 30% over those last 3 years. And so you take the $400,000 house that's now worth $520,000. That's $120,000 in net worth gain for a $20,000 investment. It doesn't take a rocket science to say, use 6x your investment. And this isn't Dogecoin or some, random cryptocurrency. This is real estate. You can see it, feel it, touch it, it's real. And, that's the type of thing that debt can help you accomplish. You don't have to buy the $400,000 asset with cash. You don't have to have $400,000 and say, oh, it went up 30%. Yay. It went up 600% versus your $20,000 initial investment. You do the same thing with rental properties.
Yeah, it's powerful, right? And it's, one thing we always wish we would have done is bought more real estate during the crash, right? And it's having that liquidity and that hopefully that financeability, right, with a good credit score, and then having that experience and have done the work, doing the work, understand the local markets, understand the opportunities, and then executing on those plans. And so I like the way you put long-term worth versus, do I need immediate cash flow, right? And versus retiring 4 to 5 years. So it's identifying what season of the wealth plan that we're in, and then tailoring the debt to that business plan and to that deal and to that part of your life. Is that a fair summary so far?
Yeah, for sure. For sure.
Excellent. So now I want to talk about maybe secret number 2, right? Once someone sits down with you and you're crunching those numbers, you're encouraging them to do the work, you're empowering them with the education. What would be step number 2 to making sure that you're building wealth using debt? By the way, you can learn more about Matt, and it's Gouge, I'm saying it right, at mtmg.com. If you want to get with him right now, it's mtmg.com.
Correct. Yeah, and that's actually a new domain. We wanted to save everyone the trouble of having to type out mattthemortgageguy.com. You can still go there and find us, but now it's a lot easier, mtmg.com. I did that for the people. I spent the money that you got to spend to get a 4-digit domain, but it'll all be worth it if I save the next million people 22 seconds each. So
love that.
I might have lost my train of thought there. The next step is
the next step. Someone sit down with you, right, and they say, "Hey, look, I've identified this property. This is my goals. Here I'm at. What's the next step to making sure that you're tailoring the debt and helping them tailor their debt to the right fit?"
Right. On the stuff that I deal in and day out, which is 1 to 4 unit, residential real estate, you're going to have different options, 20% down, 25% down. I mentioned 5% down earlier because if it's a primary that your home that you're living in, you're going to be able to put less down. But if you're buying it as an investment, you usually got to put 20 or 25% down. And that's, where we start to ask the questions, is this the only one you're buying? Is there more in the future? Because you'll get better terms putting 25% down. But if you're trying to preserve capital and deploy it on the next investment, you might only put 20 so that you can save that extra 5% and get you that much closer to the next investment property. So it's those types of questions that are, steps 3, 4, and 5. And what you're looking to do on those steps is going to help me determine a plan for step 2. Once we've determined that plan, then it's, are we paying points? Are we not paying points? Are you going to hold on to this mortgage for the long term? Some people are getting debt and they know that they're going to flip a house or sell a house. And in that case, we're structuring the loan where we want a little as cost possible baked into the loan because you're selling, versus somebody who says, I'm a buy and hold investor. I'm going to hold this thing forever. I'm going to pass it down to my kids. Then you can look at, maybe buying the rate down by a quarter makes sense because you're going to save $52 a month for the next 30 years.
Got it. So I think what I'm gleaning from here is if you don't have an expert like Matt who's helping you make wise decisions with your debt, with refinance, with purchase, anywhere from 1 to 4 units, right? You've got to build your dream team, and that includes a financial advisor, commercial real estate broker, a rock star realtor, right? For us, it's partnering and finding strategic alliances with commercial real estate syndications. Of course, the tax team, we want to be a part of that, helping you to defer capital gains tax. All of those things together, I liken us, Matt, to these guys with Roman legions, right? They have the shields, right? And each of us have our shield and our specialty and the little carve out with our spear, right? And the client or even myself, like I want to build around me the dream team or the executive team to help me make great decisions, because when we stay in our lane and our focus and our expertise and our passion, we can do that. We can have the highest amount of impact versus not having that. And so any thoughts on building the dream team, Matt?
Yeah. I mean, I think that you want to find somebody who does enough business to where them advising you, that they're not swayed by like, I need a deal to close. Right. I think that me and my team have always done a good job of that. And I've continued to lead that way and let my team know, we're going to advise people on what's best for them. And we're not going to worry about how many closed deals we have this month and next month. We're trying to advise at a high level, give people the best service possible. That's going to lead to future referrals. And we're going to have an amazing 2025 and 2027. Versus like how many deals can we shove into December of 2021. And so, look for people like that who have your best interest in mind. And the piece of advice that I would give, and I live by it, and I'm sure you live by it too, don't necessarily try to be an expert in everything. When I take tax advice and, I'm filing my taxes every year, I'm not reading tax code. I'm not trying to understand this thing, exactly. I just pay the experts, and they're paid to be the expert to advise me. Here's what you should do. Here's how you want to structure whatever it is with your tax plan, right? And financial advisor, the same thing. Like, it doesn't make sense for me or for a nurse or for a tax advisor or a police officer to take time out of their day to try to be like well-versed in whatever mutual fund they're investing in, right? Just find those high-level advisors, pay them to do what they're best at, and to put it bluntly, stay the heck out of their way.
Yeah, hire the who, don't be the how, right? And you're absolutely right. And it's and even in tax, right? There are those, because we work with CPAs, but we don't file tax returns, right? We specialize in the Deferred Sales Trust, a niche of the tax code IRC 453 to defer capital gains tax on highly appreciated assets. Like, it's super niche, right? Mm-hmm. And even a lot of CPAs, we're training the CPAs, they don't know about this, right? It's like, I liken it to like the general practitioner, right? Where if you go to the doctor and he gives you the annual flu shot and the general checkup, he's going to, but if there's like, you tore your ACL, like I did playing basketball in college, right? He's not going to just perform the surgery. And if he was going to try to be like, wait, have you done this? He's like, no, I've never done this. And I go, no, I want the Sacramento Kings doctors, right? Who did Ruthie Bolton's knee and did Chris Webber's knee. And that's the one. And I'm like, okay, this is my guy. And he's done thousands of these, right? And that's really the point here. You want to make sure you're working with the specialist who's he's done so many deals. He's been through the blood, sweat, and tears. He's known it, been through the 10,000 hours, right? All of those things to create expertise to make sure that it aligns with performance, aligns with your goals, and they can deliver. Is that a fair summary, Matt?
Perfect.
Excellent. Okay, so we're going to shift the conversation a little bit to capital gains tax deferral, right? And Matt said previous to us getting on here, he said, "Brett, I have a question." I said, "Well, save it for the show." So we can start with first. What's the biggest frustration you've seen with your clients as it pertains to capital gains tax deferral and/or the 1031 exchange? And then we can maybe go into that question if that sounds good, Matt.
Sure. I mean, first, like with all this appreciation people are seeing, I'm seeing less frustration and more, excitement around it. Like, oh, me and my wife can sell our primary, net 400,000 and pay no capital gains. That's amazing, right? And so, I'm seeing a lot more of people take advantage versus people being frustrated with parts of it. But the question I got, and I love it when I get a question that I don't know the answer to. And I do YouTube Live every Monday. I do a Q&A. And over 90 minutes, there's always something that I don't know. And I'll tell people I don't know, but I'll get the answer for you. So it's timely that this question was asked. And then, 2 days later, we're jumping on a podcast. If somebody is selling an investment property, I know the basics of a 1031, but I always defer to the experts, just like I preached. I know you can sell investment, and defer and buy a new investment. Can you sell a pure investment property and then go buy a second home?
So the nature of a 1031 exchange is like kind, right? And so what the IRS is doing when they give us these tax codes to defer or for even like retirement, like a 401k or an IRA, the intent is very important in that you're doing it for retirement, or for a 1031 exchange. If it's investment, you're moving it into like kind investment property. So you got to really clarify what's a second home. Well, is it a second home that's your primary? Is it a second home you're spending half and half your time in? Is it a second home where you're doing Airbnb for the majority of the time and you happen to spend a couple weeks there during the year? But if you were to look at it like the IRS guy comes parachuting in and lands 365 days, and each day he's parachuting in, is it Matt just living there, and not renting it and spending, a big majority of his time? Sometimes it's, well, what if I'm only renting it for a little bit, but then the rest? Well, again, what are they going to see if they parachute in every single day? So we always really encourage people to just follow the law, right? If it's going to be a rental, make it a rental. Doesn't mean you can't spend some time there with your family, but the majority of the time it's Airbnb, it's being rented out, right? So that's what I would encourage people to do. Does that answer the question?
I think so. Yeah. Because the thing here is like, you've got multiple parties involved. So it's like, how do I do right by the IRS, not commit occupancy fraud when I'm getting my mortgage? Because, when they talked to me, I said, as a mortgage pro, what the lender is going to look at is you sold the property, we're able to source those assets. Of course, you can use those assets on a second home. We don't have any issue with that. Where you have to figure out whether there's a problem is, a CPA or a professional that knows capital gains tax telling you whether or not that's going to apply to you trying to defer those capital gains from the sale of that investment property. And I
see where you're going with it now. So let me make sure I clarify. So what you're saying is imagine the IRS, parachutes down on the mortgage, right? And they're like, well, you're saying a second home. You're not saying investment. Like, is that delineated on, what you're saying? Yeah, it is. Like, if it's a second home, you're going to be able to get a better interest rate, a better term, better things versus just investment property where it's typically going to require maybe 20% down or a larger down payment, right? Maybe not as favorable. So there is some gray area there for sure, right? And that's where you might be taking some risk. And so, so I don't know that I've seen one way or the other on that. Like, I couldn't say for sure the IRS would say no to that, or that's evidence of why it's not an investment home. I do lean towards the side of, once the funds are there, right, what is the nature of the property once it closes, right?
Yeah.
However you got financing, private money lending, second home mortgage, right? And the ethical part of that obviously is another whole other aspect. But the actual law of tax deferral, to me, you traded a rental property for a rental property, okay? And to me, as long as it's legitimately a rental property, the capital gains tax 1031 would qualify. I actually had a cousin who was doing a 1031, was buying it, meaning it to be a rental, and then ended up moving into it. And then what happened is he ended up just paying the tax, right? So they failed the 1031. He paid the tax plus the penalties. So I mean, that's at the end of the day. That's just be prepared for that, right? You'll pay the tax, and you should make sure you're following the laws. Now, I do want to mention in the very beginning, you mentioned the 121 exclusion, making sure people aren't getting that confused with the 1031 exchange, which, by the way, is one of the best kept tax elimination strategies, which is called the 121 exclusion, where if you live in a primary home for 2 of the last 5 years, and you're single, you get a $250,000 tax-free on the gain, or 500 married. In fact, my wife and I, our first house we bought was $135,000 in Roseville, California in 2011. Like, we couldn't have timed it any better,
just
right?
like you planned it, yeah.
Just like you planned it, baby. And it went up to 250. Okay, it went up to $250,000 within 2 years. Literally 2 years and 1 day, we moved out, and all of that was tax free. Now, if we were single, it would still have been tax free, all that. If it had gone up another $250,000, it would be tax free. So that's an amazing opportunity to sell high and defer the tax. Now, above and beyond that, though, if you ran out of exclusion, like we just did a $3.5 million deal in Cupertino, and she lived by Apple headquarters, and her house, I think she bought it for like $400,000 or $500,000 like 20 years ago. Wow. She was single, so above and beyond her exclusion, her tax liability was like $300,000 or $400,000, and so she felt trapped in her house until she learned about the Deferred Sales Trust. Then she was able to sell and defer all of the tax and put it in cash flow and producing assets. And so you can learn more about that at capitalgainstaxsolutions.com on how that works, why that works, and how it can open up opportunities to sell your house. But I don't want you guys to be confused that the 1031 exchange, it does not work for primary homes. It only works for investment property. Whereas if you're selling cryptocurrency, a business, or a primary home, the Deferred Sales Trust works for all of those and also investment real estate. So that's why we would say, Matt, that the Deferred Sales Trust is the Netflix versus the 1031 blockbuster, right? Going on a Friday night, 45 days to identify, 180 days to close, and also only works for select assets, and you got to follow all these really strict rules. Whereas at the Deferred Sales Trust, your seller could sell a primary home or a business, defer the tax, and then they could partner with the trust to go buy that Airbnb rental, all tax deferred at any time. So these are all the things you can learn about that. But that's enough about that. Any thoughts on that, Matt, or is that
that deferred sales trust sounds cool. We'll definitely sidebar and talk more about that, because I got clients that will want to learn about that. The only thing I was going to say about our conversation is I think that I probably side to where it does make sense in that scenario we talked about with the 1031 exchange, because where we're at in Northern California, it's either to the mountains in Lake Tahoe or it's to the beach in Santa Cruz. A lot of clients that I work with are going to buy a second home, which true, it's a second home 2, 3, 4 weeks a year. The other 48 weeks a year, it's going to be an Airbnb. Right. So it is like kind in my head.
The nature is still there. Yeah, the foundation of the nature is still there, just because you use it a few times. But yeah, if you look at it, it's there. I think you're going to be fine. Great. That being said, you ready to move to the lightning round?
Let's do some lightning.
All right. If you could go back to your 25-year-old self, Matt, at Sacramento High, or maybe you're at Sac State at the time.
I was at Sac State. Yeah.
Yeah, Sac State, baby. What's the one golden nugget you make sure to tell yourself to do?
Oh man, one golden nugget. My 25-year-old self needed a lot of help, man, more than just one gold nugget. But I would say, 25. Be consistent. And that goes for a lot of things. That goes for business and for life and relationships. That's an overarching important thing for me to remember, which I probably wasn't consistent in any areas.
Excellent. Good answer. Second question. What's the number one book you've recommended or gifted the most in the past year?
The one that I've gifted the most, I I have the pleasure every Wednesday, literally like before we jumped on, my buddy Mike Zuber, he's got a channel and a community, one rental at a time. And for a lot of investor clients that I work with, they don't have huge goals of owning 1,000 apartment complex, units, right? They just want to get 1, 2, 3, 4 rentals. And so the book, One Rental at a Time, that Mike Zuber wrote, and I'm on his podcast every Wednesday, is just helping new investors get comfortable with the idea of adding a few investment properties and how much that can change their life. I've probably sent out 40 of those in the last year.
Fantastic. One rental at a time. This part of the lightning round strategy is the rich dad, poor dad strategy, right? So I imagine you read Robert Kiyosaki's book, Rich Dad, Poor Dad. What's the one thing that you try to practice when it comes to rich dad, poor dad?
I think that I've always had like an entrepreneurial mind. And so, the switching of mindset from like employee mindset to owner mindset to investor mindset, like that's a strategy that, even in my current business, when you're a mortgage professional who's calculating income and taking, applications and all the other stuff, I'm an employee of my own business. As the business has grown, that has shifted to where now I'm running a business and I'm leading folks. And, I don't know if my business would ever become truly passive where I have somebody else run it. I'm totally out of it. But, being able to step back sometimes and think about things from that perspective, employee mindset, owner mindset, investor mindset is good practice. Not just on real estate investing, but, businesses that we run day to day as well.
Awesome. Love that. Second to last question. What are you most curious about right now?
What am I most curious about? I am very curious about the metaverse. I hear that there's real estate transactions happening in the metaverse. I don't understand it, which is the reason why it's probably, piques your curiosity, right?
Totally.
We're living in some interesting times.
I'm curious now too. You call Matt the mortgage guy to get your debt on the metaverse stuff, right?
Yeah, exactly. Right? Yeah. If you want to buy a building in the metaverse, call me. I don't know if that product's available yet, but coming soon.
Fascinating. Last question, Matt. After all your success and all the people you've helped get mortgages and make great decisions with their debt plan and building wealth, how do you stay centered in your values, and how do you stay encouraged to charge forward to reach new heights?
I mean, it never gets old to help somebody with the biggest financial decision of their life. I'm sure that there's some people making $10 million financial decisions, but for the vast, vast majority, your home and getting debt, getting a mortgage on the purchase of a home or refinancing a home is the biggest financial decision anyone will ever make. And, from somebody buying their first house to the person who refinances and saves $1,100 and is in tears because they thought that they were going to lose this house through divorce, like that stuff never gets old. And so for me and my team, we'll grow and we'll do hundreds of transactions, but at the heart of every single transaction, there's still people. And so that to me will never get old, serving and helping people, and like the feeling that you get from helping people. I love it.
Matt, the mortgage guy, I want to thank you for being on the show, and that is inspirational for me. I want to encourage you to keep empowering people through education and helping them build their wealth with debt in a smart, responsible way, doing the work, and then you helping them to tailor the debt to their goals. For our listeners who want to get in touch with you, would you remind them one last time what's the best place for them to find you?
Yeah, please head over to YouTube and subscribe to Matt the Mortgage Guy on YouTube. I'd love that. You can go to mtmg.com. There'll be a form there to fill out, or you can go to greatmortgagebroker.com. We've got an intake form there that's going to connect you with somebody no matter where you're at in the country. Tell us who you are, where you're at, where you're looking to do. Somebody on the staff will reach out to you. I try to make it easy. Greatmortgagebroker.com if you're looking for a great mortgage broker. If you're not looking for a great one, maybe somewhere else.
Awesome. Thanks, Matt, for being on the show. I also want to thank our listeners for listening to the episode of the Capital Gains Tax Solutions podcast, also stream on expertcresecrets.com, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust or the 121 exclusion when selling your primary home. It's a great way to defer capital gains tax and grow your wealth. Hey, if you're struggling with cryptocurrency, highly appreciated assets or business businesses or real estate or 1031 exchange, you want to have time and energy to buy deals at optimal timing, all tax deferred, please go to capitalgainstaxsolutions.com and register for our free mastermind. It happens every single Friday at 10 a.m. PST, and where we are sharing our secrets on the Deferred Sales Trust, and we're empowering you with the strategies. So again, go to capitalgainstaxsolutions.com. And if you have a deal that's live right now, closing in the next 30 to 60 days, $1 million net proceeds, $1 million gain, at least is the minimum. You can go to capitalgainstaxsolutions.com and register for a free consultation with myself or one of my team members. Thank you for watching or listening to this episode. Please rate, review, subscribe, and we look forward to